Hello and welcome. It's another trading day right here in Lagos, Nigeria. Here's what's coming up in the next 55 minutes. And the Africa Development Bank, the AGM meeting, that begins today right there in Cote d'Ivoire. We have Inijon giving us details of what's playing out. And the Reserve Bank of Zimbabwe gold cover rises 12% since March. And Kenya's value-added tax regime set to take effect from July 1st, 2025. It's great to have you join us. I'm Ladi Williams. Let's get a check on what's playing now with the markets now, starting with commodities. Let's kick off with oil earlier, and we see that recovery there early in the trade. $64.94 barrel. That's Brent still holding up in the green, up 0.25%. WTI crude, that's 0.28% better, $61.70. And it's still on the tariff issue there. A nice push higher with those crude oil and U.S. equities futures there. That's helping, push demand for oil, and which is taking the price up, making the bulls see some kind of light at the end of the tunnel before all those price drops that we saw in the previous trades are coming from last week. But it's still looking not so bad, at this point. We'll see if we can get $70 with this new rise, but maybe not this week. Let's get a check on metals now. We're seeing gold prices, they've eased today after U.S. President Donald Trump set a July 9 deadline for a trade deal with the European Union. But we're seeing spot go down 0.3%, $3,346, still holding strong to that $300 mark there, above $3,000. Spot silver, that's unchanged, $33.46 per ounce. We see platinum, that's down 0.2%, but still holding on to that $1,000 psychological level. Palladium, that's even better there, 0.7%, but just right there on the brink, $999 per ounce. So other stories now. Foreign portfolio investment into Nigeria's equities market, that fell sharply by 92.39%, and that's for April 2025. As inflows dropped to 26.64 billion naira compared to 349.97 billion naira recorded in March. According to the data from the Nigerian exchange, total foreign transactions also dropped by 90.99% from 699 billion naira in March to 63 billion naira in April. The decline in April represents a sharp reversal from the strong foreign interest recorded in March, when foreign transactions made up about 62% of total trade, and foreign participation, we see that plunge to just about 13.0%. And we see the Securities and Exchange Commission stated that listed companies on the Nigerian exchange declared a total dividend of 1.1 trillion naira. That's for shareholders in 2024. According to the DG of the Securities and Exchange Commission, Momotimi Agama, the volume of dividend payouts demonstrates improving confidence in Nigeria's capital market and signals healthy returns for investors. He adds that between January and December 2024, the Commission approved new issues valued at 3.68 trillion naira. This included 59.82 billion from fixed income issuances and 3.62 trillion from equities, indicating strong investor appetite for the equity segment. And over the weekend, Nigeria's capital market stakeholders, they gathered at civic centers. Nairametrics hosted the Capital Market Choice Awards. We see Mr. Femi Otedola, CEO and Chairman of First Holdco PLC, and Geregu Power PLC was named Activist Investor and Market Maker of the Year. We see the Director General of the Securities and Exchange Commission, Dr. Momotimi Agama. He delivered the keynote address. Mr. Agama stressed the need for capital market participants to follow the rules to help deepen Nigeria's capital market. You see, Governor Sanwo-Olu was also honored at the Capital Market Awards for positioning Lagos as West Africa's financial hub. I also had the privilege of presenting some award categories.
Transnational Corporation PLC.
The president of the Africa Development Bank Group in September this year. The bank prepares for this process with its annual general meeting in Abidjan, a meeting which is scheduled for, holding right now for a couple of days. We see the Committee of Board of Governors. They're there to discuss issues connecting to the election, as well as the launch of the 2025 African Economic Outlook. Our correspondent in Ijoma is there and following the meetings.
The final week in the month of May 2025 is a memorable one for the African Development Bank Group. It's a week that they're having their annual meetings for this year. So for this week, it's going to be a very busy one with a delegate of over 6,000 comprising heads of state, representatives from the private sectors, the NGOs, and everyone, in fact, will gather, everyone of importance, that is, will gather in Abidjan to make some decisions. So the conversation will be around the theme for this year, which is making Africa's capital work better for Africa's development. But the climax of the meeting for this week is that the group is going to elect a new president as the tenure of Dr. Akinwumi Adesina comes to an end. And I'm here for Channels Television to give you the details of all of the meetings.
All right, we see Nigeria's brewery sector stands at a crossroads. We head as we're, pushing fully in 2025. Once a robust contributor to the nation's fast-moving consumer goods as FMCG landscape, the industry faces serious headwinds ranging from foreign exchange volatility and rising interest rates to high operational costs and declining consumer purchasing power. Let's delve into the AfriInvest 2025 brewery sector update to uncover the realities on ground. Joining us for this, we have Damilare Ashimi, who's a macroeconomic strategist at AfriInvest Research and Consulting. Great to have you on the show.
Good afternoon, Ladi.
Yeah,
Thanks for having me.
Yeah, it's great to have you. So, definitely we like to, put the spotlight on some of these industries and sectors to see how, the general business environment is, especially for that sector. We're looking at the brewery players, now the brewers at this point. So talk to me about how, FX volatility, how that's impacted the cost structure and profitability of the major brewers in Nigeria over the past year and what we're seeing in this, maybe the first quarter of 2025.
Yeah, once again, thank you for having me, Ladi. So if you look at the industry performance over the last 5 years, it has been very challenging. The magnitude of the pressure on the industry became worse in 2023 following reform rollout by the new government, especially as it affects FX, energy prices, as well as PMS. You recall that the new administration in 2023 removed what I would describe as subsidy across those three major variables that have been largely subsidized over this year. Electricity tariff, the subsidy was largely removed. PMS subsidy was largely removed. And the one that had the biggest knock-on effect on producers was that of FX. So because businesses typically plan at the beginning of the year, nobody saw that coming. So the last 2 years saw the brewery industry recorded a combined loss of above 500 billion naira. In 2023, the loss was in the region of about 253 billion for the 4 listed brewers. And last year, it's even increased to about 263 billion. Now, of course, what caused that was more of the FX impact because Nigerian brewers imports substantial amounts of their input. But more importantly, the inability of the brewers to fully pass on the cost effect on consumer was the challenging factor because knowing fully well that brewery products are discretionary products, so level of consumer elasticity to the product is relatively up there, unlike food items that consumer might not be very elastic in terms of reaction to it. So, but we are beginning to see a glimpse of hope. We are beginning to see glimpse of hope from several perspectives. One is the fact that, especially beginning from Q4 2024 last year, after strategic actions by brewers, including raising of prices of some of their strategic brands last year, and also the gains around FX stabilization, because after the major shock we witnessed in 2023, whereby the FX depreciated by more than 60%, and also in the first half of 2024, we also saw more than 40% further depreciation. So we moved from about 481 in 2023 July. We ended 2023 at 907. Then we moved from 907 to about 1,008 at some point mid last year. But following the excessive volatility, I mean, after the CBN was able to restore some sort of confidence from foreign investors, reduce FX exposure, and reform the banking and other sectors where demand for FX is always elevated, we have seen the naira, stabilize around 1.516 level, and that was positive to brewers. And also on the energy side level, the major giants in the Nigerian market, in the person of the Dangote refinery, came on stream late Q3 last year. And with the price leadership strategy of that business, it has also helped stabilize the price of PMS, which at some point, both PMS and diesel anyway, which at some point was in the region of 1,003, 1,006 level, and has helped rein in those prices a bit. So the relief from CBN effort, the building of the reserve, the increased intervention in the market, the reduction of speculative activities has kept FX rates stable. And this helped the brewers because as they were able to premiumize some of their strategic brand to increase revenue, because revenue last year, in fact, outperformed our base case projection. We projected about a 39% revenue growth for the industry, and the industry did 71. That shows you the level of price adjustment that took place last year. But more importantly, they were able to manage some of their costs as well, especially around FX costs, because the FX volatility reduced, and also many of the brewers exited their foreign denominated position, which has been piling pressure on them. For instance, a notable player that exited their FX exposed segment last year was International Breweries, offsetting their legacy debt of about $379 million to an Abu Dhabi company. So there was a rights issues. Nigerian Breweries also did rights issues last year. So the injection of those equity capital, the increasing of price, the relative stability in the macroeconomic environment, plus the resurgence in social life in Q4 were the turning points. And that Q4 performance, where at the end of Q4, we had industry profit at about $7 billion, was sustained in Q1, which has then given the hope that barring any major macroeconomic shock that will cripple activity significantly, the brewery industry is on the course for profit, because in Q1, the profit before tax that was $7 billion in Q4 last year had risen to $81 billion by Q1. So if that momentum is kept based on our simulation, we think that the brewery industry in Nigeria might be posting a pre-tax profit in more than 200 billion by the end of this year.
Right, and definitely we've seen the companies, not looking so bad, quite resilient so far, even with the macroeconomic headwinds. But let's look at the consumer now. From what you've seen so far, do you think the average Nigerian consumer, regardless of battling inflation and limited disposable income, have they been quite resilient, in your view?
I mean, Nigerian consumers are one of the most resilient in the world. I'm saying this because if you look at inflationary trajectory in Nigeria, the last time we had a single-digit inflation in Nigeria was in February 2016. So since March 2016, Nigerians have been battling double-digit inflation. And the inflationary pressure in Nigeria became exacerbated, so to say, from 2019, after the land border was shut in August then, for importation of food items. Yet Nigerians kept adjusting and driving their lives. So what a lot of people have done, especially, is to increase the purchase of what I would describe as sachetization, right? Why people are not able to buy as big as they used to buy before, they are still being resilient in terms of doing more to be able to meet their basic needs. Now, talking about the purchasing power, especially over the last 2 years, if you look at the magnitude of depreciation in exchange rate, because whether you like it or not, every Nigerian consumer are directly or indirectly affected by the FX issue, because even if you, as a consumer, you are not importing from abroad because you feel you don't earn as much, the companies that are producing those basic items you are using, those basic food items, the processed one, in fact, even the unprocessed one that is packaged, many of those packaging items are imported. We're talking about the brewing industry. One of the inputs they import is aluminum, which is a major a commodity they source from Russia, Ukraine, which are regions that are under crisis since 2022. So by and large, every consumer in Nigeria, directly or indirectly, are affected by whatever happens to the exchange rate, and that's why we have the pass-through effects. The same thing on oil. But by and large, Nigerians have been very resilient. We talk about the increase in minimum wage last year. It's about 133% increase, right, from about 30,000 to 70,000. We still have about 8, 9, 10 states that have also not fully implemented that, right? We have the exchange rate knock-on effect since 2023 has been more than that. But yes, Nigerians have remained resilient, and the resilience of Nigeria materialized in
Damilare, yeah, you've painted a picture there of resilience, but I'm also curious, how much, can the average consumer take, at this time? Where do you see that breaking point?
The reality is that I strongly believe that Nigeria have seen the worst in terms of the negative knock-on effect of inflation on household. Yes, it can be argued that the current inflation reading in Nigeria may not be fully reflective of reality, especially following the rebasing exercise last year, early this year rather, where many people felt that how should 10% disappear from the inflation? Recall in December, inflation was about 34.8, and following the rebasing, it fell to 24, and now we're at about 23 level, which naturally is still very high because any double-digit inflation is outside the CBN target level. But more importantly, if you look at the indices that triggers inflation, you look at FX rate, right? Like I said, there was a time last year when FX rate was around 108 level. So now it is at 1516 level. That's stability. We might not feel the full effect now, but gradually. So one thing about prices is that prices are always downward sticky. It's easy for price to go up when there is a minute shock, but to pull it down is always a difficult thing. And that's where the government also needs to be more proactive in their effort. Not only should you implement policies that will reduce the price of some certain commodities, but you must also follow it up with a lot of monitoring mechanism to ensure that those prices are reflecting. The reality is that around July, August, September last year, we have the price of some commodity that is using rice and beans, for example. The price per bag was almost 100,000, if not excess of it. But now they are both reduced to about 50, 60, 65 levels. So that's a sort of reduction. So what I'm trying to say in a nutshell is that Nigerians, in my own understanding, my own belief, is that Nigerians might have seen the worst of it in terms of inflation. The government just needs to consolidate on some of the relief we have experienced. Because if we have had FX price appreciated because of some of the reforms in the CBN, then the government now should be aggressive in trying to attract foreign investors, because the more we attract investors to sectors where we don't produce adequately, the more we ease the inflation pressure on Nigerians going forward. Because once you supply more, the market dynamics will crash price. I don't know if you hear the chairman of BUA recently saying that once they fully operationalize their rice plant, price of rice will crash further, and that is reality. So because everything is more of law of demand and supply. I mentioned Dangote PMS the other time. If Dangote had not entered the market last year, PMS in Nigeria now might be around 1,000, 1,005 level. So what government just needs to do now is to create the enabling environment, addressing security issues, incentivize businesses to come in and produce locally, and that way inflation will gradually thin away, and Nigerians will have better purchasing power to live their life.
For PMS, if the Dangote refinery didn't come online, I felt a little shock in my body. I don't want to see that kind of price, for PMS. But going forward, when do you see this sector? When do you see them coming into full, profitability? And do you think that will happen in 2025?
2025 is already the year that the brew industry will snap out of the 2 years loss-making record. Like I mentioned earlier, based on our own estimates, we think that the brew industry is on course to making a combined pre-tax profit above 200 billion. That will be the strongest in more than half a decade, because 2022, 2023, there was massive loss. 2023, 2024, there was massive loss, 265 billion, 363 billion. 2022, a sizable profit of around 17 billion. 2021 was also not huge. 2020, COVID was a problem. So the last time you have the brew industry, doing very fine in terms of broad-based performance was as far back as 2017, 2018. So this year, we believe, barring any major shock, like the shock will be like that level of what we saw during COVID, will be the one that will throw the FX rate above 2000 level, will be the one that would throw inflation rate, even with this rebasing, throw it back to 30% level. So once we don't see those kind of magnitude of shock on the economy, we think that the brewery industry is turning the tide in 2025 to the profit side.
All right, we'll definitely keep tracking that. Thank you so much. It was great having you. Damilare Ashimiu, macroeconomic strategist, AfriInvest Research and Consulting. Thank you.
Thank you for having me, Lady.
All right, we'll take a break now. When we come back, we'll head straight to the markets, find out who's making money and who's not. That's the moment. Just stay with us. All right, let's head straight to the markets now. We have Will with the details, and we meet again. Will.
Yes, we do, laddie. Remember I told you that you should sign that contract, or you don't know how Business Incorporated is going to go?
Well,
now, I don't know if you've got a deal that is beautiful, as Trump would say.
Beautiful bill.
Big, beautiful bill. I hope you have something big and beautiful. If not,
well, just President Trump has that for now.
Okay, laddie. So let's just track how major equities in Africa are performing at intraday. We see mostly positive sentiments there. Nigeria's NGX was up at intraday by over 0.5%. If we have that quickly on the screen, rebounding from Friday's negative performance. And this is driven by gains in consumer goods. We see that mostly driving, and we see significant gains also in Boa Foods. Boa Foods is in the consumer goods sector, and we also see Access Holdings and the rest doing up. But we see their share price jumping up by about 22 naira at intraday. But let's look at JSE in South Africa. It's up also by over 0.5% at intraday, 94,000. And we look at the NSE in Kenya. We look at Egypt first of all. We see what Egypt did at intraday. Let's quickly see that Egypt is down, however, at intraday 0.24%. Well, we'll quickly flip to what Nairobi, the Nairobi Securities Exchange, did on Friday, performing in the green, rebounding from the negative sessions we've been seeing. That's 0.05%, and the EGX in Egypt is 0.24%. We hope that they will close tomorrow in the green. But let's see what's happening. Let's dig deeper now into the activities at the NGX and see what's driving the price action. And joining us to give us more insight is Kende Jones, Head Research and Strategy and Korea Asset Management. Good afternoon, Mr. Kende. Good to have you on the program.
Good afternoon. Thanks so much.
Yeah, so we see stocks like Boa Foods, NACO, Access Holdings as movers at intraday. What is driving the positive sentiment for Boa Foods? If you just look away from the other stocks, because Boa Foods has been trading flat for the last 3 months now.
Yes, so if you look at Boa Foods for the last 3 months, it has been trading upward trend. And you notice that when they release that quarter 1 2025, it has a good fundamental. So if you do a financial analysis on the financial result that came out, that any report that came out for quarter 1 2025, Boa Foods had an impressive result. And also, there's been an investor sentiment that is going on in the market, especially shift of from one sector to another, in terms of that shifting from the oil and gas sector, the insurance sector, to consumer sector, the industrial sector. So these have been a supportive momentum that is giving Boa Foods an edge in the market. And investors want to position themselves based on the result, the expectation that the result for quarter 1 2025, quarter 2 2025 will turn out a good positive for the company and investors. So Boa Foods is a good buy currently, if you based on valuation, and it's giving buying interest based on what is going on in that sector, Boa Foods sector currently. So Boa Foods has been a.
Go ahead. Finish your thought.
So yes. So also, looking at the industrial trend of what's going on in the industry, based on the consumer sector, based on the industrial sector, there's been a positive momentum whereby the law of course deal, a lot of negotiated deal is going on. And last week to this week, institutions are playing high in the market, especially for this selected stock that you may mention, Brewery. There's been a course deal last week, and Brewery did about, there's an institutional that did about 20 million units in Brewery selected in Brewery last week. So this has been a investor confidence in the market for the stock.
Okay, definitely. We've been seeing that movement for consumer goods for a couple of weeks now, coming down. We see Nigerian breweries, international breweries, NASCON, Dangote Sugar. They've all been moving in the upward trend now. We're hoping that with food inflation, maybe, food is the in thing now, but we're seeing that upward movement for consumer goods. So hopefully they continue to sustain that positive momentum. But let's move away from consumer, move to the banking sector now. You saw on Friday, UBA listed the rights issue of 6.8 billion ordinary shares on the NGX, and this has taken the total issued and fully paid up shares of UBA from 34.1 billion to about 41 billion units. This rights issue listed, we all remember, at 35 naira per share. UBA is currently, as I looked at, trading at 34 naira 40 kobo. What should markets be expecting from UBA, especially the fact that it declared the final dividend of 3 naira for the 2024 full year, and we see that it is still trying to catch up with its peers, Zenith Bank and GTCO, which are having higher dividend payouts. Do you see, with the more outstanding shares in the market, do you see UBA catching up with GTCO and Zenith Bank in the near term?
So in terms of UBA, if you look at UBA, when UBA listed the right issue last week, there was a market reaction to that, because based on this, investors believe that the EPS for UBA will surely drop. So when you increase your share outstanding, the EPS will surely drop. The only thing that can make the EPS to go up is when there's an increase in your line of revenue, in terms of the gross profit, in terms of gross earning. So in terms of the finance income, other income increase. So if UBA keep the positive momentum of good dividend payout ratio, in terms of, look at interim dividend of 2024 was 1 naira, while in final dividend was 4 naira. If there was a good track of this dividend, where UBA keeping high dividend, I believe that they will catch up with other banking sector. GTCO have really done well in terms of 2024, and I believe in terms of the interim dividend of 2025, they will surely do well. Why am I saying that UBA are trying to do a catch up on this? When they added the right issue on Friday, you will see that there was a market reaction. There was a high offer in the market, while a lot of people were bidding low in terms of the price. They were bidding low in terms of the price, and investors expect that the market should shift. The share price should shift from 35. It's supposed to be trading around 43, 40 naira, but it should have gained from 35 towards 40 naira. And this is not happening based on a lot of investors tend to hold high dividend yield. If you look at what's going on in GTCO, the dividend yield for 2024 is about 12%, while for UBA is about 9%. So they tend to shift from a dividend yield stock to a low higher one. So in terms of this, UBA is quite doing well, and I believe that there will be a rebound where by Q2 2025, it will surely get to that price, 39 naira, 14 naira, to its I2 value, fair value of what is supposed to be trading in the market. So, and again, another thing that is really affecting share price of UBA is a lot of negotiated deal is being happening off the market, where a lot of institutionals are buying, that they are not giving room to retail investors to determine the price, which for demand and supply of the share price. And this is really not a good one for the market, especially for UBA that is quite coming up. with the upward trend momentum, saying that it's paying good dividends. So demand and supply should have take forces in the share price. But for me, institutionals are really making the share price of EBA to quite low for now. So there will be a rebound in quarter two. By the time EBA release the quarter two results, there will be a rebound that will be done, I believe.
Definitely, we'll look out for that, and we hope institutional investors will give room for the retail players in the market to be able to determine where the market, the unit price for UBA's share price should go, UBA stocks. So what is your outlook for the market? We are kicking off with in the green today, green at intraday. Where do you see the markets ending today? Because Friday, we thought it was going to end in the green, then flip, it went to the red. So are we going to see any surprises for Monday?
So currently, if you look at the market, at the media market, the market was appreciated by 0.62%. And this was majorly driven by the strong stock in the market, Fresco, Nestle, and the rest. However, Fidelity Bank is quite dragging the market down based on what is going on, the cost saga that is going on. Like there's a gain in Nestle, Presco, Tantalizer also, which also lift the market sentiment also. There's been a little caution in the banking sector, telecommunication sector, due to macro uncertainty that we expect that today MBS will release that quarter one 2025 GDP. So there's been a little sentiment that is going on in the banking sector, the telecommunication sector. And we believe that in the agricultural sector, when the quarter one 2025 GDP is being released, the agricultural sector will believe that it will be, there will be a recovery in the agricultural sector, and it will be a positive recovery. This is giving investor confidence in the consumer sector, especially in terms of the Presco, Nestle, Nigeria Brewery, and the rest. So for today, I believe the market will be a bullish momentum for today, where we are seeing a lot of cross deal, especially there was a cross deal that happened today in Access, where we saw about 30 million shares at the price of 21.75 kobo that has been done, which make a value of 282 million. There was also a cross deal that happened today in the market, Fidelity Bank, where it cost about 15 million shares is being done at 18 naira 35 kobo. So I believe that the market, there will be a sustainability in the market, and there will be a positive momentum in the market today.
Oh, we'll look forward to that green close today. Thank you so much, Mr. Kehinde Jones, Head Research and Strategy and Korea Asset Management, for joining us on Business Incorporated.
Thank you.
So let's look at other markets now. In the Middle East, we see mixed trading for major stock markets. We're tracking the Gulf, Dubai 0.28% up, Abu Dhabi not so good, in the red 0.16%. And let's look at still within the region, Saudi and the Qatari indexes are trading in opposite directions. As with the UAE, we see Tadawul down 0.17%. Obviously, Qatari index flat in positive territory. Let's look at the U.S. markets now and see how they traded in pre-markets. We see the Dow futures up over 1% at 1.07%. S&P 500 futures also up 1.21%, and Nasdaq futures 1.39%. Now, stocks declined on Friday after President Trump raised trade fears again, warning Apple and recommending stiffer duties on the European Union. But following the suspension of tariffs until July the 9th, we're seeing some breather for stocks, and that's why we have it at green for the U.S. markets. Let's flip now to the Asia markets and see how they performed in today's trading session. We can tell that it's mixed on Monday as investors reacted to President Trump's delay of the 50% tariffs on EU imports. Now, Japan's Nikkei rose 1% and South Korea's Kospi surged 2.02%. So the impact of that is highest since February. Now, while Hong Kong Hang Seng dropped 1.35%, we see China bucking that trend, mainland China bucking the indexes. Oh no, it actually slipped as well, 0.05%. If you see China in the red, 0.05%. India's Nifty 50, however, edged up 0.5% by mid-afternoon trading. That's what we have for the markets in Asia, and hopefully we'll see more positive trading and not more saga from Donald Trump in the coming days.
So I guess the question is, Woods yet?
Oh, well, are we or
When
are
it
we
comes to these tariffs, at this point,
I
but
don't think. I think there's always one new one.
yeah,
Like it's good. It's coming like this. Don't do anything. I'm gonna impose tariffs.
right.
If
And
you
we
do
see the
anything, I'll
markets,
impose tariffs,
yeah,
and the
they just
markets
react.
just goes all
I wonder
crazy.
when the markets will stop reacting to that.
I,
Maybe
I,
not,
I
maybe
think
never.
I think they should just know that Donald Trump is going to come up with all sorts and to just price everything in and
Right.
just know that whatever he says, the market must go on.
I guess investors will be investors. Thank you so much, Will, there for giving us the details. But, talking about Europe, let's take it on to Europe now. Let's head over to Berlin for a look at how European markets are doing after U.S. President Trump's decision to delay the 50% tariffs. And we have Chipondo Chimbelu there with the details. Great to have you, Chip. So how are European shares trading?
Well, Laddie, no surprise, European stocks are trading higher today. And the pan-European Euro Stoxx 600 is actually up around 1%. And Germany's blue chip index, the DAX, is trading around 1.5% higher. So, of course, markets are recovering after the heavy losses on Friday following U.S. President Trump's 50% tariff threat. Obviously, the stakes are high because the EU-U.S. trade relationship is the world's biggest. But it is worth noting that prior to Trump's announcement of that delay, the EU wasn't too dramatic or alarmist in its response to the latest tariff threat from Washington. The bloc's top trade representative, Maroš Sefcovic, said that Brussels aims to secure a trade deal based on respect and not threats. And here in Germany, the finance minister, Lars Klingbeil, told the country's biggest newspaper, Bild, that the tariffs are just as harmful for the U.S. economy as they are for the EU's. So obviously, this is a major deal, but it seems like the European leaders are keeping a cool head for now.
All right, let's take a closer look at the tariff story. Why did negotiations take a turn, last week?
Well, we do know that the EU sent a trade proposal to Washington early last week, and then President Trump made that 50% tariff threat on Friday because he wasn't happy with what the bloc was offering, and he also felt that the talks were moving too slow. Now, Brussels hasn't disclosed what was offered to the United States, but there have been several media reports about what it was offering, both more trade and an increase in economic collaboration in some areas, in particular in the energy sector, and also when it comes to building infrastructure. Now, there are also other areas of cooperation that the EU reportedly proposed, such as in telecommunications, pharmaceuticals, and also the steel industry. But it, of course, does appear that Washington wasn't happy with that offer. So the question now is whether the EU will be able to come up with a better proposal before that July 9th deadline. And of course, if it doesn't, Laddie, Brussels is also prepared to impose tariffs on nearly 100 billion euros worth of U.S. imports.
Yeah, I guess everyone's trying to make some kind of deal at this point. But which European products will be most affected?
Well, last year, 20.6% of EU exports went to the United States, and the prospect of 50% tariffs could, of course, deal a major blow to some industry, especially auto manufacturing, and then, of course, manufacturing, just manufactured goods, the luxury sector, and also the chemicals industries. And, of course, the one country that could lose a lot is Germany, and we've already seen that with the auto industry, which has been hit by higher tariffs already, which are around 25% right now. Now, several car makers have lowered their guidance for this year because they are expecting a major hit from the tariffs. What is, of course, interesting, Laddie, is that pharmaceuticals, which are the biggest exports to the United States, have been left untouched by reciprocal tariffs. So there is some hope that an escalation of the trade dispute can be avoided. And of course, the hope here is still that the threat from the latest threat from U.S. President Trump is a negotiating tactic.
All right, definitely. So much to look out for there, Chip, but we'll keep tracking to see if there are any more announcements that could rattle the markets. Thank you so much, Chip, for the details.
All right, thanks, Laddie.
All right, to other stories now. We see the Reserve Bank of Zimbabwe says their gold reserves have risen 12% to over 3.1 tons since March. With the bank projecting it needs 2 or 3 years to reach 6 months of forex cover. As of March, the bank had $629 million worth of forex cover, consisting of $296 million in nostro accounts from mostly export retention proceeds. And we see $274 million worth of gold, and ZIG, that's about 3.8 billion. ZIG there. The gold is derived from the payment of royalties, wherein half of the royalties are paid using the mineral that has been traded. These measures were introduced to make the country's domestic currency a commodity-backed legal tender amid a decline in confidence in monetary and fiscal policies. And Kenya's domestic debt has surged by more than 700 billion Kenyan shillings over the past year, reflecting the government's growing reliance on internal borrowing to bridge budget deficits and fund operations. Data from the Central Bank of Kenya shows the country's gross domestic debt stood at 6.187 trillion Kenyan shillings as of May 16, 2025, compared to about 5.4 trillion Kenyan shillings on June 28th. That's about 777 billion Kenyan shillings increase in under 12 months. Treasury bonds remain the preferred debt instrument, accounting for over 84% of total securities as of mid-May 2025, translating to 5 trillion Kenyan shillings, and the Treasury bills totaled about 949 billion Kenyan shillings. And a wave of changes to Kenya's value-added tax regime is set to take effect from July 1st, 2025, if the Finance Bill 2025 proposals are passed into law. The bill currently in the National Treasury aims to broaden the tax base and reduce misuse of VAT exemptions. Among the key proposals is the reclassification of several previously exempt goods and services to attract a 16% VAT rate. Under the proposed changes, all VAT-registered persons will be required to issue tax invoices not just for taxable goods and services, but also for zero-rated and exempt supplies. All right, to all the markets now, let's get a check on what's playing out in the crypto space, and it's mostly green on the screen at this point with Bitcoin there, trying to make that move back to the all-time high. That's the latest one, about $110,000, $111,000. But we're seeing 1.99% jump there. Pockets of red with Picoin, and that's in the red, and a couple of most of the stable coins that we track also in the red. Ben, if we look at the headlines in the market now, the top headline there, we're seeing the EFCC, that's the Economic and Financial Crimes Commission, Mr. Ola Olukoyede has revealed that the agency has recovered some money from the digital investment platform Crypto Bridge Exchange, that's CBEX. And there, he made that announcement over the weekend. So, some funds recovered at this point. We know that was a big, major headline there with a couple of people, investors losing money there. Then the developer behind decentralized exchange Bankers claimed IP rights over the core technology underpinning the entire DeFi industry in a new suit aimed at fellow decentralized Uniswap. The lawsuit, which I think that's someone in New York there, claims to own 2 patents that the plaintiffs say were the first smart contract designs, which could allow any buyer or seller to transact in a liquid, reliable manner in a decentralized environment. Then we see Pakistan, they've allocated 2,000 megawatts of electricity in the first phase of a national push to support Bitcoin mining and AI data centers as the country moves to legalize cryptocurrency and attract foreign investment. So definitely a lot to look out there in the markets. But joining me right now to discuss the major issues, we have Tunde Lasukomi, is a country manager at Red Swan, joining me right here in the studio. It's great to have you.
Here, Ladi. It's good
right,
to be
and
here.
I think we're almost matching with ties. There's a few differences there, but it's great to have you, today. And definitely, we did get that headline there with the EFCC boss saying that they've recovered some funds.
Yes.
Yeah, CBEX was trending for the longest time recently. So is it getting easier or harder to recover stolen funds? That's in the crypto market and industry?
Yeah, well, the beauty of blockchain and the crypto market industry is traceability. The blockchain itself is an open ledger technology where every transaction are recorded, be it now or in the future. You have access to transaction that has been done or carried out decades ago. Once you have the hash graph number, so blockchain transactions are easily traceable, And the blockchain brings in transparency such that you can trace it from the point of movement to where that asset ended. So I believe that will add to the recovery. Then there's been a lot of effort when it comes to compliance and blockchain investigations and the likes, which is aiding law enforcement agencies and private industry players that act as consultants to such agencies.
So that notion that, you know, once you commit some kind of crime or fraud in the crypto space, that most of the time is not traceable.
No, that's not correct.
That narrative
is not correct.
Is gone. So, what would you say is the way to, that's, you know, from the regulatory perspective, you know, right now, to make sure this doesn't even happen? Okay. You know, frauds like this.
Yeah, well, the Nigerian government has actually taken a very huge initiative through the currently enacted ISA bill, that's the Investment and Security Act. So, and that's for the first time in the history of this country, digital asset is now being captured as a form of investment instrument, though there are still some gray area in terms of painting all these digital assets to be the same thing. But that first step is that it will help them to be able to weed out unqualified organizations that are bent at defrauding Nigerians. Then they can license those that are legitimate organizations to operate legally within the system. So with the advent of the Investment and Security Act, I believe that will play a long role in also giving institutional organization confidence to come into the digital asset landscape.
Right. All right, let's pivot now to tokenization. We know there's a lot, you know, happening, you know, in that space right now, and we're trying to bring that technology, you know, into Nigeria. We're tokenizing almost everything. I guess you tokenize real estate. I guess you can tokenize people. Investment. But you know, what improvement have you seen, you know, so far in the space?
All right. Thank you so much for that question. You know, before now, in the past 1 decade, the buzz and the noise has been around cryptocurrency. And that's because it's like the first test use case of blockchain. Then additionally, that noise is being fizzled out now because we are moving from just hype, trends, because most cryptocurrencies are not backed by real-world assets. And the world is transiting from the crypto noise to borrowing the principles of blockchain that will make the capital market, the conventional capital market, more efficient. As we explained earlier, that blockchain brings transparency. Blockchain brings liquidity, it brings efficiency and also cost reduction. So now, back to real-world asset tokenization. So now, what we are seeing is that our youth have been playing on the crypto space for over a decade. A lot of them have been swindled. A lot of them have won, have made huge investment or huge gain. But now we need to start moving traditional assets to the blockchain. This bill, number one, the traditional capital market will benefit from that a lot. And apart from that, now that we know that that's the future, that's the direction in which the world, the global economy is going to, everything is going to be digital. So the earlier we start as a country, the better for us. Though I believe with the ISA bill capturing that, a lot of traditional players are coming in. And recently, you know, we met at the AMEDA conference, that's the Africa and Middle East Asset Depository Association. So, and you know, one thing that conference summarized to is that every country now to go back to the drawing board and incorporate digital assets into their landscape. So in such a way that the traditional players still remain, while they also start building the digital aspect of it. So
right. So, you know, definitely we're seeing, you know, progress, you know, in the global stage, and, you know, some countries are, you know, taking a cue from what we're seeing in other parts. So, do you think tokenization will play a role in, you know, government activities at some point?
Well, definitely. Tokenization is wide. Beyond the capital markets, there are a lot of things that blockchain would also do when it comes to data management, data identity, electronic voting. You know, because the record on blockchain cannot be altered. Once the transaction is done, it's there like for life.
So if I vote for candidate A.
Yes.
It's candidate A that will show them.
Exactly.
On the blockchain.
It can be altered.
Okay.
It can be altered. Then, in addition to what I've said earlier, that tokenization brings a lot of benefits. Just the same way the mobile technology was able to make the fintech and the new banking industry to be able to play better and higher in terms of financial inclusion. So, and that was being able to done with the aid of internet and the mobile technology. So tokenization is bringing that same concept, that same efficiency to that same productivity to the capital market space, such that all of the traditional bottleneck in terms of long settlement period, blockchain or tokenization brings real-time settlement, blockchain brings be able to attract FDI. Then recently, the CBN announced that they are introducing the NRBVN. That's BVN for non-resident Nigerians in diaspora. So all of that is to aid financial inclusion and also to make it easy for Nigerians abroad and even foreigners to be able to invest into the economy back home. The current administration is targeting a $1 trillion, dollars economy. And without incorporating digital assets, I think they will still have a long way to go. So for me, for the country, reward asset tokenization, there's a lot of education that still needs to be done.
Yeah, and talking about education, at this point, how hard or easy do you think it would be for the average Nigerian to be able to adopt tokenization?
Funnily, it's not even the average Nigerian alone. It's on two parts. That's the institutional player, then the retail players. I was privileged to be at an event recently in the year whereby most of the asset and pension managers were there and invited a close colleague of mine to introduce them to blockchain, more like a corporate gathering for blockchain lecture. And after I gave the lecture, one of the top lady there raised her hand that, wow, she was surprised and very amazed by that lecture, because before that time, when she hears blockchain or crypto, she just thinks like it's an Harvard Yahoo. That was her statement.
Wow.
So, so there's the Harvard Yahoo.
Wow.
That was a clear statement. So, which means that there's a lot of education to even be done to the conventional player apart from the market. Because I was also privileged to be at one of the Taiwan Bank's AGM, annual general meeting last week. And you would almost think you are in a retirement gathering, because most of the shareholders there were people in the retirement age. So, and what this points to is that the younger generation, the Gen Z, the millennials, the future of the country, are not really involved and participating in our traditional capital market. We are saying with tokenization, we are not saying you should stop doing what you are doing. It's the same product. We are only digitizing it and bringing it to another platform, which the current younger generation can relate with, be it company stock, be it real estate bonds, be it even treasury bills. Some countries
because the youth want to invest. They're actually keen, on investing, going by what we've seen, in the crypto industry so far. I'm sure they would like to replicate such gains, in the traditional market.
That's very correct.
So is this a silver bullet to bring the youth into these markets?
Well, it is. It is, because they are already used to blockchain. They're already used to using all of this HAP and DeFi and all of those technologies. And another thing is that if we are not bringing reward assets that are tangible, that you can seal and forge, and touch on the blockchain, companies and fraudsters like the one we mentioned earlier will easily dissuade. So we have to create an alternative for the youth. We have to create an alternative by bringing assets, company stocks, equities, treasury bills, bond, tokenized real estate on the blockchain, because that's the platform they are used to.
And do you think, I guess blockchain could help with settlements?
That's correct. Real-time settlements, exactly.
Yeah, instead of the usual, the T+3. Exactly. About that. All right. It was great having this conversation with you, and definitely we'll keep watching and see how much adoption grows right here in Nigeria, the African continent, and in the global space for tokenization. That was Tunde Olasukomi. He's the country manager at Red Swan. That's correct. Thank you for coming on today.
Yeah, thank you so much for having me, Ladi.
All right, so there you have it. That's how most of the markets are looking today. Not looking so bad, most of the markets that we track, but, things could change, at any point with one announcement. So you need to keep your eyes on the markets at this time. But that's how much we can take today. Thanks so much for watching. We'll bring you more updates tomorrow on what's playing out at the AFDB annual general meeting and other markets that we track at this point. Thank you for watching. I'm Ladi Williams from the team right here at Channels HQ. Bye for now.